Thank you guys for being on this podcast. So we have Lyndsey, Bethany, and Michael. So today we're diving into the latest changes in the SOP, DOGE, and I actually found an article today. It was funny that it was in Business Finder where pop stars and movie stars were awarded PPP money and they didn't use them for the right purposes. But that came out today. I thought that was pretty interesting. Let's jump in. What do you guys think about, so it was one 11-year-old that was awarded or granted 320 million. And what about
No, it was multiple people.
So I did think about that. Some people put their businesses in the names of their children as an asset for them, and it's a tax strategy. So I can see the possibility of a business being owned by a person or an entity being owned by an 11-year-old. I can really see that if it's legal in whatever, state it was formed in.
Good point.
Yeah.
Good point. And then what do you guys think about, I read this. So Post Malone, I love this. I'm sorry. I'm like fascinated by this. Post Malone got money, he spent it on other businesses. And they're saying that they're actually going to come out with a bill and extend it from 5 years to 10 years on fraud. Post Malone, Korn, Maroon 5. Yeah, all these people. But anyway.
Well, their touring groups, they probably do have an entity that runs their touring group if they're not using a management company. So it probably did qualify as a small business, and they were people that weren't able to do their job during COVID. So, I mean, I don't know. It sounds like okay, Maroon 5, okay, but maybe they have a touring company that's an LLC or something.
But I think it has to do with the appropriate use of the funds.
Yeah.
Well, what do we know about that? Do we know anything about that?
They're just blanketing it as alleged fraud. But again, if it was used in the correct purpose, which if you have an accountant or a CPA or a bookkeeper or somebody that's helping you manage that, then it's not hard to prove that they've falsely accused you of something.
Yeah.
The pattern is personal expenses and luxury items. So yeah.
That's problematic.
So that's that. And then, you guys ready for this one? Let's talk about the reintroduction of lender fees. Skipping a point. Who wants to go first? Lyndsey.
I think it's a great idea. And it really has to do with the stability of the program. If I really just narrow it down to one thing, the stability of the SBA 7A program needs to be around. And if that requires for us to collect more of a fee up front for each borrower, and to be really honest, that shows the seriousness in the borrower's aptitude of taking that loan as well. Yes, it kind of stinks that they rolled it out real late and they're sticking it to people now, and they didn't really give us as banks or lenders enough time frame to kind of warn those that were in progress. But I think that it needs to come back.
How come don't you think they didn't reinstate it or reintroduce it previously? Like, why now? What do you think? Because of the administration changes, do you think?
Yes.
Yeah.
Absolutely.
I think it has a lot to do with it.
What do you guys think, Michael?
I agree with Lyndsey. I think that it's needed. We definitely want to have the program remain at zero subsidy as much as possible. I also agree that I wish there had been a little more time to allow borrowers that were expecting a zero fee and then suddenly a fee. So I've won that's about another $25,000 that was not anticipated because of the fee being implemented. Look, it's at the grand scheme that's a minor issue, not for that borrower, but it is a positive thing. I believe that the fee has been reintroduced because overall for the program itself, the long-term integrity, I think you need to have those fees in place.
Do you think it'll affect your volume?
I think it might to a degree. We do tend slightly larger loans, so those fees are already in place. Anything over $1 million was already incurring these fees. That didn't change. It's for those loans below $1 million. So might impact it a little bit, but at the end of the day, we want the program to
Right.
remain strong. Yeah, want
So
to thrive. So,
and then going back to basically changes agency-wide, they mentioned citizenship verification. What do you think?
right.
Yes. SBA enforced citizenship verification for loans, business SBA, blah, blah, blah. Yeah, yeah, yeah. What do you guys think?
Well, that came up. I was at SBLC, the Southeastern Lenders Conference, that was put on by GLQC, and they had a session where they were discussing this. It was like, I can't remember the name of the session, but there was an attorney, Ethan Smith was in there, and he was talking about it, but people were asking questions. They're like, what if this person who is not a 20% owner is not a citizen? What do we do with that? Does this get kicked out now? So there wasn't really a definitive answer at the session.
Yeah,
Well,
and to Bethany's point, there is a lot of uncertainty and lack of clarity. And I understand you rolled something out and you roll it out pretty quickly, and so you don't capture all the aspects. But as a lender, then that's very difficult on our end to determine how do we handle certain items. For example, one of the things, Jellum Law actually sent an email out yesterday or the day before, talking about for if you have a minority owner that doesn't qualify, that they are going to divest their ownership interest. And within that email saying, well, that can be a way you resolve it. However, there's been the 6-month look back, and so you need to take that into consideration. However, if you look at the most recent SOP, that 6-month look back, that language is no longer in there. That doesn't mean it won't come back in the next SOP, but as of today, it's not in there. So theoretically, you could have someone who doesn't qualify go and divest their ownership today and are no longer involved in the business. And as long as it's all documented well, tomorrow you could do a loan form and it qualifies. However, there's that lack of clarity. Then, for example, also with the requirement for being able to put 81% of that ownership into E-Tran. I have a borrower that's actually a really good sized borrower that they have a part of that 81% includes a small amount that's held by a publicly traded company. There's also another that's a nonprofit. What do you do?
What do you do?
What do you do? So I sent it to that question.
You emailed 7-8 questions.
I did, and they came back a week later, basically said, "We're running this up the food chain. We'll get back to you." They don't know the answer. Yeah,
nobody knows the answers. But speaking of which, do what you do is phasing out, right?
Hopefully.
I hope. Fingers crossed.
Yeah.
So, with that, like we kind of talked about each bank doing it and defining that differently individually and how they do loans. Because again, in the SOP, it's not really like stated exactly what to do. So given that philosophy and the current changes, do you guys think that's a positive thing?
I think it's a very positive thing. I think that there needs to be, again, going back to being able to ensure that this program stays around. And if you've got a bunch of gray area where you can manipulate it to be like, oh, well, we don't have a policy around that, so we just did as we did. It can start to scrutinize and point fingers and, well, they got to do this, why can't we? So it just makes it where everybody is equal playing field, equal lender abilities, that people can't, I don't have somebody that's going to call Michael and be like, oh, well, Lyndsey said.
Or Lyndsey said it. Let's play telephone. Lyndsey said it. Sorry.
Right. I mean, Michael's a non-bank lender, and maybe, again, they've got people that are very much coming from a background of banking, and they understand that there's typically policies in place. And they're not cutting any corners by any means, but there might be others that are out there being like, oh, free reign.
Mm-hmm.
I was with a non-bank lender, but a lot of us came from the banking side. And of course, what some of these lenders forget is the line in the SOP about doing prudent lending. So while the do as you do at the same time, that doesn't mean that you're just going to run around crazy and give anyone that has a heartbeat a loan. You need to do prudent lending. And that's where I think that's going to burn some of these some of these lenders that have loans defaulting. They go to the SBA going, I want the guarantee. Well, did you do as you do? Well, yeah. Well, why'd you do this loan? It's not prudent lending.
Mm-hmm.
Oh,
So why was this put in place? Why was this do what you do put in place originally?
that was my question.
Good question. Great minds, great minds.
Well, I was not in the room as it happened, as Hamilton would say. I think it was to try to encourage more lending, and specifically with kind of fintechs, although the fintech model is not an applicable model for the SBA, because their model is essentially you put more loans on the books that will offset the losses because they have a higher loss ratio on average. Well, I've heard of fintechs being usually in the like 8 to 10% default rate. You apply that to SBA and you're going to have massive problems. And also it's going to affect everyone because the guarantee fees are going to skyrocket to offset those losses that the government's getting.
Yep.
Okay, because I wasn't sure. What about the fintech PPP fraud? What's that all about? Anybody? You guys know?
I'll speak
Go
from
on.
a bank perspective that where we collected every single bit of financials up front, like the 940s, the 941s, we collected P&Ls. I mean, we K1s to prove ownership percentages. I mean, we did our due diligence, and we even still made the customer sign like a hold harmless to ensure that the bank would never see the loss. And it was our due diligence, and there were checks and there were balances and there were, I mean, I worked for a smaller bank at the time, but we had it down pat. And to my knowledge, every single loan that they had on the books, every single one of them was forgiven by the customers filling out and doing all the right things. Whereas other lenders, I don't know that they necessarily had a very good structure. And so whether we label it as fraud or, I mean, I did have a business acquisition at the beginning of last year that the gentleman didn't apply for his PPP forgiveness. And boy, that was fun because that PPP loan had gone to a collections agency.
Wow.
Yeah.
It was a pain in the butt. So I don't know that it's necessarily fraud as much as it was just holding your borrower responsible to get it forgiven.
And talking PPP and fraud, there is a massive amount of fraud. However, it's 2005. It's been five years ago right now. It was starting to get really crazy. And no one knew what was going to happen. The country was shut down. People were scared.
Yep.
And
I remember that.
the government had two choices. They could get the money by having a lot of checks and balances and making sure that lenders make sure that every loan is correct, and that every borrower, you do whatever many checks and you try to make sure there's no fraud, blah, 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 or you get the money out. This is not a political thing. Both administrations, because the Trump administration was the first part in 2020, and then the Biden administration in 21, both administrations basically created, and as well as Congress, that you get the money out. You knew there was going to be an element of a level of fraud, at least that risk. Now, keep in mind also, when in 21, when the second round hit, the SBA installed their own levels of fraud checks, doing things that lenders couldn't. And so that's how they try to address the rounds of fraud from the first time around. However, my own, from what I saw, just, my little corner of the whole thing is I think there was a much more level of fraud in 2021 than in 2020. So even though the government installed levels of fraud on their end, there was still a very large amount of fraud. There was also a large amount of fraud in the EIDL loan program.
Yep.
It was a really ugly time. Unfortunately, a lot of bad actors took advantage. And I thought that Congress already extended the level of time that they could pursue the fraud up to 10 years. I thought they already had. Yeah, which is good. And so plenty of time. However, I'm sure even then they still won't get everything. But the more that they go after these individuals or groups that committed this fraud, the better off. It's unfortunate that is becoming more the focus, only in that there are the PPP, while it was a blur to me and many others, it did do a ton of good. It
did
really helped the country stay on its feet. And once everything closed, to be able to continue on. Imagine if they hadn't done that. They just shut that country down. And no one had any avenue to get any kind of money, pay for food, pay for their housing, everything else, that would have really been ugly. So I don't condone in any way, shape, or fashion fraud, but I understand the reasoning and the risks and the determination that, look, it's more important to get this money out and quickly than it is to make sure there's no fraud.
Yep.
So we actually retooled and pivoted in March of 2020 and helped people get EIDL loans during that time. And, you know, I'm pretty proud of the work that we did because we were able to get people money that otherwise would not have been able to like navigate the system at all. We had like, you know, cell phone numbers of a couple of people at SBA that were really like, you know, sympathetic to what our clients were, you know, going through. But there was an also pretty unsavory element that we dealt with as well, because like, you know, people got, you know, wind that we were helping. And so I had calls from all over the country. And then I find out later that, you know, some of the people that we helped, and we were like writing people's congressmen and stuff like this, but this other woman, I guess, that we helped use it for a down payment on a house. So, you know, I see these fraud things come up where people are getting like you know, prosecuted for stealing like, you know, $20,000 in loans and stuff like that. And so I'm just waiting to see, you know, to get asked about some of our clients, honestly.
So who do you guys
For that subpoena.
Yeah.
who do you guys think are going to take the losses, like the banks or the government?
Government.
Well, keep in mind, especially with the 2021, they provided a hold harmless. So long as lenders acted in good faith, they would be held harmless. Now,
So then it would be a loss.
right. Now, I've heard that they're individuals in the government or groups or whatever that they've kind of been, you know, ignoring that, wanting to be tough on these lenders. Well, going back to, you know, if that lender had acted in bad faith, that's one thing. But from what I've heard, I've not heard of any lenders that acted in bad faith. Therefore, they should be held harmless.
Wait, what does that mean? So what, like bad faith? How do you define that? Like, how
Well,
do
they weren't like running a scheme to get people like, here's where you go to get your
Right.
LLC. Here's where you go to get your IRS number and bring that back to me, and I'll go get you whatever in a loan or whatever. Like people, like there were some people that were like, you know, that set up shop. Like we set up shop and help people get disaster loans, but there were people that were like doing it for like, you know, people that had no business getting, you know, these loans.
how do they even
They're
find that
faking
out? Like, how do they do that? How do they? Oh, I guess they could, you know, the DOGE thing, and they uncovered a lot of stuff. I mean, we're talking
But
about
it only takes them to
fraud.
learn. It only takes them one time for them to learn the secret of the loophole to then recreating all these other fictitious places or reactivating old LLCs that they had. They hurry up and went online and reactivated and paid their state registration fee. And then boom, they got money.
People are like, that's not cool. People are nuts. I gotta tell you. I mean, SBA is crazy, but in the last couple of days, months, it's been overwhelming.
I mean, I think that the reduction in workforce is going to possibly impact us in a lot of areas. I mean, we already see some of the delays with like, I think I've got a 504 that we're trying to close, and we submitted the appraisal for approval on the 27th, and we still don't have the approval. And normally we would get it in like 2 to 3 days.
Oh dear.
So that's gonna, what was it? 40% reduction. But then I also read in 2026, then I think it's 2026 that they were like saving $465 million by cutting the workforce. But they're also, you know, the whole thing with the student loans, the 1.7 trillion moving to the SBA. Why are they doing that? Like, what is that all about? What do you guys think? Anyway.
I don't think they're going to be able to handle the workload. I think it's maybe a temporary fix to see, but I don't know what they're thinking. I don't, you know, like Michael said, we weren't in the room.
Yeah, that's
Right.
Nobody asked our opinion.
Right. But to Lyndsey's point, also, if you're not a PLP lender doing a 7A loan, life's going to be much tougher because submitting a loan to the LGPC is going to take longer. Getting if you have a borrower that needs an EIDL subordination, that's going to take longer.
Oh, I didn't even think about that. No.
Uh-huh. Yeah. Not saying it doesn't happen. It's just, I mean, EIDL subordinations were taking, I think, like 2 to 4 business days.
Mm-hmm.
Now, I know of one that we had recently, like 2 weeks later, we were still waiting.
Wow.
So Yeah, so that's if there's going to be a real impact. So you're going to need to plan accordingly. You need to set expectations correctly. Now, I don't know about this, but maybe on the IRS side, doing tax transcripts, getting that, if that's going to be, because at the very least, processing we're in tax season now. The business tax returns are supposed to have been submitted middle of March. Who knows how long those will take to to show up within a tax transcript.
I just
So
had an error on a customer's tax transcripts not showing.
yeah,
For 2024.
so there is going to be an impact.
2022, 2023.
Oh no.
That's
So
not
I know. So thankfully, like
Wait, this should be like a game show. Is my client a liar or does the government suck?
Door
Yeah,
number
no,
three.
no play. Yeah, that.
I'm telling you, thankfully they had an accountant that had their ELT pages of where it was submitted. And then thankfully it was in a situation where they did get a refund. So I had her give me her bank statement where the deposit was put into the bank account. I can't imagine that the IRS accepted your tax return and gave you money if they didn't accept it.
Good point.
So then
So
how long do you think you guys, so how long do you think an SBA loan will take now that there's a reduction and given the additional portfolio? Depends.
That's a great question. Yeah, won't be
I think
quicker.
it's
I'll just say that.
well, but PLP is I don't see why we're gonna have any issues because we didn't have any reduction in workforce. So
Unless your borrower has an idle loan that needs a subordination.
or you've got some
Very true.
crazy hair. I mean, every
Sorry,
SBA
yeah.
loan has hair on it. Let's just be honest. But it's just a matter of how much hair do you have to tame kind of thing.
What kind? Yeah.
I guess so it depends on the institution. It depends on, the type
Depends
of
on your borrower.
depends on the borrower. What do you guys
Yeah, I had a borrower the 4363 error code when we were actually at Fligel last year, and I was like running around to Ginger, and I was everybody SBA. I was like, hey, I need your help. Hey, I need your help. Hey, I need your help.
That's another thing. If you have hold codes you need to get resolved, there are fewer staff members will be there to help resolve those.
That was a really hard error code to clear, by the way. It took 2 months.
2 months? What
But we
about
got it clear.
what about the modifications and deferrals? What do you guys think about that?
That's a good question. It'll depend on how much of the reduction is going to be with, Little Rock or Fresno for servicing issues. Same with if you have to get the guarantee fee paid. How long, what kind of staff cuts are there? Don't know.
Basically we don't know, but there's a lot of changes happening. There's a lot of changes even with the small business loan program. So they're basically talking about lowering it to, 350, but then again at 250. So how do you think that's going to impact all of you? If
I
anything.
don't know that it's necessarily going to change that much. They're just now going to have that SBA guarantee fee. Still PLP, so we're going to be able to try to get it done in a reasonable time frame. Again, I think it just has to do with your borrower, and some of that stuff is unknown until we go to pull a transcript or go to finalize an E-Tran and finally get that approval. Sometimes we don't know any of that stuff till the very end, so it's almost there's no crystal ball.
But our friends that are starting new shops maybe having some problems.
Maybe.
Yeah.
Maybe. It depends if they're focusing on small loans or not.
Scored loans. What do you guys think about that? Offering that? Scored loans. Why are you guys so quiet today? What's going on?
My bank doesn't do scored loans. I do know other shops that do them. I know like you've had Rob on the call before, and First Federal, they've got a scoring model that they use that he thinks is going very well based on other podcasts that he's been on and we've spoke about. I know Colony Bank does it. So I don't think they're necessarily, they're not, I feel like they're doing that scoring model and they're going back and having a human check to make sure that it made sense that it scored that way as well. And I haven't heard that their performance is not up to par.
Well, I think, I mentioned this yesterday, that a bank a large bank that I work with let go of that, 500 and under department. So I'm seeing it affected in different ways in different banks. They were a huge lender. And so they let go, again, like 20% closures, underwriters, some servicing people. That was one. And then we kind of talked about it too. The three other lenders let go, again, another 20%. So I see the trend. Why do you guys think that's happening? And what do you think in the future, how banks are going to rebuild? Because when they get rid of the people, there's still the volume. So I'm not sure.
Well, I think can kind of go to a couple things. I think the biggest is I've been hearing, and this is rumor, but that there have been some issues with loan portfolios, and kind of going back to the do as you do that we were talking about earlier, and then you did as you shouldn't have, and you did some loans that are now defaulting. And when you're suddenly an organization that's facing a lot of loss, a lot of unexpected loss, one way to try to offset that is to cut your overhead, which means staff.
Yeah.
Yeah. So I suspect that at least in a couple of the cases, the reason for the cutbacks are because of a portfolio that is getting worse. The other aspect is if you're going to start cutting staff, who do you keep? You want to keep the ones that generate the most profit for you. The small loan program, while it does a lot of good to a lot of people, doesn't have the same level of profitability as the larger loans. If you have to do the same amount of steps essentially for a $200,000 loan versus a $2 million loan, and $2 million, you make a lot more in terms of whether, a lot more money, whether it's you're selling on the secondary market or not. It's still it's more profitable. Therefore, you're going to cut the small loan program first, or at least focus more on the larger loan sizes than you do the smaller loan sizes. It's unfortunate, but it's also business. So that's what I think, at least in some cases, is what's going on in the market.
The one with the same company, they hired 100 people last year. And part of the reduction was maybe the portfolio, but they're not meeting their goals. And I find it interesting that some banks are busy and some banks are they're not. So whether it's they're a large bank and their goals are down, hence the reduction. But why is it that some lenders, it's kind of ebb and flow? Some are busy, some aren't. I mean, there's kind of like a lot of anomalies, but what's the main point? Like, what is it? Like, how do you stay busy? What makes it so that, go ahead.
Could be their credit box. Each lender has changed as far as their credit box goes. I mean, I can tell you right now, Hancock, Whitney, we will do certain like boutique hotels, but you got to be really good. Or I'm going to, refer you on to somebody else and be like, listen, this is not my niche. This is not my place. But then I also have had some folks that have said no restaurants. There's also a component where they're saying no construction because the construction area was so volatile for a while. So I think it depends on the bank or the lender itself that's approving it. I do feel, I don't know, my thoughts around it are just simple, that you also could just be milking a paycheck. So if you're not hungry and you're not out there to do it. But I will also say there's been broker fraud that I've seen as well, where maybe you referred or relied on those referrals and they weren't good quality. So maybe that's why they were let go, is because what business they brought in ended up being fraudulent.
Ooh, I would love to. I wish I was a fly on a wall and I can hear all these discussions. But actually, Lyndsey, that brings up a point. So franchises, restaurants, they're bringing back the list, are they? Yeah, of eligible
There's
franchises.
talk, they're bringing it back, and I love my folks Edith and Con and Santos. They're great points of contact. I know McCllelan, I've talked about this too. We still check that registry and we still do our due diligence, and we still have those checks and balances to make sure that you're not investing in something that is an underperforming or dying brand.
So do you think that, I guess in the next couple of months, where do you see portfolios growing? Is it franchise? Is it hospitality? Is it a certain line? What do you think?
That's a great question. I do think if the franchise directory is reinstated, I just talking for myself, it makes franchises more attractive because right now, you don't have that kind of safety net in terms of the eligibility of a particular franchise. And I've been hearing of franchisors starting to make changes to their franchise agreements, elements that when the SBA was the one dictating what's acceptable or not, it was much harder for them to do. But now that they don't have the big gorilla of the federal government saying, sorry, if you want all these lenders to do a loan to your franchisee, you have to make this change. Instead, it's I'm one bank saying you need to make that change. And the franchisor's like, you know what? No, I'm just going to tell my franchisee to go down to your competitor. It's a different scenario. Right. Not to mention, because of those potential changes, we have an outside law firm do a legal review of the franchise agreement to see what issues there might be, because to have an underwriter read a 150-page legal document, they're not
They're
necessarily
well
always
over
going to check.
150 pages.
Well, yeah, that's true. Yeah, I was trying to lowball it a little bit. Yeah, you're absolutely right. So having that outside firm do the review is an element of protection, but that's also an additional cost to the borrower. And then even if they do find issues and you go back to the franchisor saying, my attorney said you need to change this and this, again, franchisor could go, I'm just going to go to your competitor, have my franchisee go to your competitor, screw you. So that's a problem. So the SBA reinstates the franchise directory, now I have comfort level again in terms of being more interested in doing franchises, because right now I have that hesitation.
But here's the next thing that you follow is that franchise gets wind that you're doing all these loans. Are you going to cap your portfolio with so many of that same franchise?
Yes,
Probably.
until I see some performance.
Yeah.
And last place, there was a franchisor that, I could have gotten a whole bunch of loans. I said, let me do 3 and then see how it goes. Yeah, 2 of those never ended up defaulting. So,
well, and that's the next big thing with these franchises is that they're pushing these folks to sign multi-unit deals.
yes.
And that's the unfortunate part, is that most institutions are going to give you pushback if you have a multi-unit deal that's signed, especially if you've never owned or operated a franchise before. So you're going to get some pushback from your underwriters and your bank standpoint, is that the multi-unit, they don't want it.
Higher risk. Yeah.
What's the likelihood, though, of giving a borrower a loan if they haven't been a part of a franchise? Like if they haven't been in the industry, what's the likelihood of you guys giving them the loan?
I'm going to say from a standpoint of the BDO, you need to come with all your strengths, and you can't come to me with no assets and no money.
Right.
You can have a dream and we'll help you make it real. We'll get you with Bethany. We'll help you get the business plan. We'll help you, make sure we capture all the right things. But if you literally came to me with a wish, it's going to be a wish for a while. You need to have a good personal financial statement. It needs to have some wherewithal. You need to have a resume that's designed to show the strength behind you being able to be an owner operator.
Yeah. I mean, that's Bethany. We talked about that in a previous episode where I'm going to buy
that jewelry store.
No. Yeah. I'm going to buy a Louis Vuitton workshop. And so
just because you like purses doesn't mean you need to run a business.
Correct.
Okay. But with that given, how do you go about, going and partnering with, Lyndsey? How do you prepare the borrower to make them
you just have to have
superstars?
You gotta have really hard conversations. It's those uncomfortable conversations of how do you make this a reality? And if they're not willing to take your advice, then stop spending your time.
Yeah.
Agreed.
So then, Bethany, do you sit down with somebody like me and we go over everything and the likelihood is nah or yeah. But what
Well,
have you?
most of our referrals are coming to us from lenders or business brokers or loan brokers, people that already have eyes on a deal that like it. So, and they say, hey, you're needing this business plan or feasibility study in order to get this deal done. But, that doesn't mean it's going to get done just because we do the business plan. We have to have the right, information inside of it. So, we really probe and say, hey, even if you don't have direct industry experience in this, purse manufacturing factory or whatever,
Let's make it relatable.
have you had budget management experience? Have you done hiring and firing? Have you done personnel management? Have you done project management? Have you done whatever? So all these like work skills or whatever, we pull out of the client and we, wordsmith it and, say why it's a good idea for them to do it.
But
I literally did
I
exactly what Bethany did. Literally did exactly what Bethany just described for an RV startup, ground up construction startup, never owned an RV in their life or an RV park. But what I did do when I pulled their credit report is I showed every RV they've ever owned. I made it very relatable. I talked about their degrees. I talked about everything, and they approved it. It was $2.5 million deal.
Good.
There you go, Linz.
So it is very doable, but I can promise you, back to Bethany's point.
Did you freeze? No. Everybody froze.
Dream. I'm sending it to the SBDC so that they can use their free resources on going to those classes, listening, getting those life skills that allow them to pad their resume.
But also too, when I found it so interesting about learning about Bethany, you also do the market research and and search out the competitors, and it's more than just a business plan. You do a lot. I mean, that's
Yeah, no, it's like a usable document too, but we have a woman that, we're doing what is proportionally a pretty expensive business plan for her. It's our lowest price point, but, she's only borrowing like $100,000, but the bank really needs it for her restaurant because, restaurants are tough, but she can get it done with $100K. And so, with that business plan, she'll be able to like actually use it, not just like give it to an underwriter and this like checks the box for the bank or whatever. And so, we're giving her a few extra sections in there too, to make it more useful for her because it is, she won't have to make a down payment probably. So, this
That's awesome.
for that. Yeah.
Bethany, so I guess within the last 6 months, the people that are coming to you, what's the most common, is it a franchise or what are people looking for?
Well, I actually just talked about this in a webinar, and we are seeing equal portions, about a third of startups, expansions with or without real estate, and acquisitions. So we're seeing, a healthy mix of all of those things. But some of the things that we're seeing for feasibility studies that might be interesting for you all to learn about is that we've been seeing a lot of like sports complexes, like indoor pickleball or outdoor soccer or, something like this. Yeah, we're seeing a lot of those and we're doing a lot of feasibility studies for them. It's kind of interesting. I had a conversation at NADCO with a guy that's the president of one of the CDCs. And I said, but have you ever been to like South Florida and seen all of these like old racquetball courts in condos from like the 1960s and 70s? Yeah. And nobody's playing racquetball anymore. Is pickleball like the next racquetball? And he's like, well, maybe it is, maybe it isn't. But, if I don't do their loan, my competitor is. And I was like, okay.
Really? That was an interesting comment. So
yeah,
that's not fun. What are you guys? Bethany? Oh my God, Lyndsey. Oh God, I can't.
Other Bethany.
But going back to the borrower, as a bank and a non-bank, what are you guys seeing in terms of industry?
It has to do with how you package the deal. I mean, you have to lay out your weaknesses and your strengths, and you got to learn how to mitigate it. And I know I'm speaking a bunch of bank jargon for those listeners on your podcast that are not necessarily in banking, but ultimately, if you've got, a 650 credit score, I've got to mitigate that. I've got to explain why you have a 650 credit score. So I will tell you that when the prudent lending comes involved, I've got to highlight every fantastic thing about you as a borrower, but I also have to talk about competition. And I've got to say, just because you like Eliana's coffee, 7 Brews right around the corner, and so is Dunkin' Donuts, and so is Starbucks, what's going to make you different from them? So it's all about how you package the deal, and you just have to make sure that you do your best by gathering that information, which is why you hire Ross and Bethany to do your business plan, so that they do all that for you. And it's not a hair pull deal, and it's simply a copy and paste for me. And I'm like, ooh, I love this statistic, and I put it in there.
Are you guys, but so are you seeing more of an industry?
I
Currently?
see everything.
Everything?
I've got some rent replacements right now. I do have some big business acquisitions. I had a landscaping company out of the Panhandle last 2 weeks ago that closed. I've got a rent replacement that closed on the 31st. I've got another rent replacement that's a 504 that'll close next week. So I think there's some opportunity for real estate for people that are now seeing increase in the real estate rental area, for them to be able to get in and buy, because they have paid so much in rent in the past that it might make sense for them to get a mortgage. Just like back when we were kids and we were renting apartments and we were spending retarded amount in an apartment.
You like freeze up. Uh-oh.
But I have seen a bunch of business acquisitions come in my way as well. But I also equally get startups. I'll say that there's some statistics out here in the Bay County area where I am in the Panhandle, that we are one of the startup capitals of the world, like successful startups, not something that they crash and burn within that 2 to 5 year period. So it's pretty cool.
It is pretty cool because you kind of like see everything
Mm-hmm.
as a bank, and then as a non-bank, do you see the same, Michael? Kind of like all over the place, or one specific?
Well, I'm with a bank now, but
I mean, I know.
yeah. But we're seeing a lot of business acquisitions, debt refis, and we do loans across the country. So we see all kinds of businesses, and really interesting ones. Doggy daycare is one of the recent ones we're looking at. And there's a lot of different stuff, even a little bit of international trade, although that's going to be interesting to see how that goes over the next.
How that goes with the tariffs.
Yeah. Let me know if you need an export business plan for that. We do those at the the ITL program. They like our reports for that. But also, I've got one too. I just read a questionnaire for a client that hired us, that they do our questionnaire or whatever, and it was for a pole barn business that was being acquired.
Oh,
really,
listen.
cool business. It was very.
That's so cool.
Yeah.
Especially with all the barn dominiums that people are doing, the structure, the base structure itself is a pole barn.
A pole barn? Wait,
a pole barn. Mm-hmm. So they essentially can do it with wrought iron, and it's still the exact same equivalency to a barn dominium. It's a structure, and it can sustain the winds of a hurricane. In Florida, we're worried about that stuff. So it's actually just as expensive. It's not expensive to do a regular build. So, and they're much harder to insure. So,
Oh, okay. Well, here's a fun question regarding businesses. What is the craziest business that you've ever approved a loan for? Or even maybe nothing, but
I'll start just from a minor perspective, from the business plan perspective. One time we did a business plan for a company. I really thought it was very ingenuitive. This guy would take all these what does it mean? What's the word when the car is you can't sell the car anymore? It's
salvaged.
A salvage car. So he would actually find salvage BMWs and take out parts and resell those parts on the internet. And he needed money to get more inventory. I thought that was really very niche. I don't know. Being in a niche business myself, I appreciate the niches. Okay, that's mine.
Did he get the loan?
Yeah.
I did a car crusher.
A what?
For a car crusher for a junkyard.
Car crusher.
Yeah, it's like the movies. Yeah, they put it on a little thing and then they crush it.
Equipment finance. You did equipment finance for that, or did it go SBA? Yeah.
I didn't even know that existed. I didn't even know that existed.
Pretty fun. I've also done a fire truck.
No, that's fun.
But you gotta remember, I'm hybrid, so I can do conventional lending and SBA lending. So I get to have the best of both worlds.
Do you ever do anything fun like an ice cream truck?
I've done multiple food trucks, SBA.
Oh, that's so fun.
We've done Froyo franchises. We've done a lot of those.
Oh yeah. Marco's Pizza franchises. I've done Eliotto's franchises. I've done Fazoli's franchise, Checkers. I've done a whole bunch of fun franchises.
What about you, Michael?
Michael, tell us
Michael.
Did a tugboat company. in San Francisco
Oh,
Bay. Yeah, they did. They're the tugboats, so you're moving the big ships around, and it's this kind of niche thing. I think they're the only one or one of the only ones in San Francisco Bay. Made a killing.
A
It's crazy.
Do you
tugboat.
have a collateral issue because your collateral floats?
No, no,
Okay,
they're able
good.
to. Yeah, you secure them.
I'm sure that they probably have some kind of slip where they have like an assignment of rents or something that they threw on
Right,
there.
right. They put on there. Yeah.
Did you guys
So
ever
those
do
different
like
things.
like I've heard uh a floating uh what is it? It's a
Like a floating bar.
floating
We got
floating
plenty of those at Crab Island.
floating tiki bar or a
Okay,
floating
Key West. Key West. That's very Key West.
yeah.
Come to Crab Island in Destin and you will also find them.
Okay.
That was like
Yep.
that's a niche and that's pretty fun though too, but it's all interesting.
My husband
Cool.
has this thing in the back of his mind that he wants to get up in a pontoon boat, demo it, and basically create a floating restaurant, if you will, but resale and go and find like Checkers burgers, McDonald's burgers, Burger King burgers, and sell them to those folks on the water. I'm like, pretty sure that those
No.
franchises would frown upon that.
Yeah. I mean, actually talking about franchise. Oh, wait. Yeah, talking about franchises and with the changes and getting serious for a second. Are there any franchises currently like that are tanking? That are like not doing that great?
Okay, so I know Santos and them sends out an email, like a score sheet, if you will. I will be very honest. I haven't looked at it in like 2 months, but I'm sure there are.
Yeah, they'll probably, you think they'll go down? Like, do you think they're going to be affected in the next year? Like go increasing, decreasing? What do you guys think?
Well, I think they've already been
Actually,
infected
well,
because if you
no.
think about it,
Well, yes, but
they've already been impacted. Your interest rate was variable. You were impacted by your rate. Your royalties didn't change. So you've got a 6% royalty, a 2% for marketing, and then your interest rate on your loan just went up 2%. You tell me. Yeah, they're affected.
yeah, I didn't realize it was like that.
Yeah.
So then moving forward with all the changes, all the craziness, all the rock stars getting money, I know we can't predict the future, but what are you thinking about the changes and like what do you see? Like what's the one thing that you think we'll see in the next 6 months?
More volatility.
Mm.
I think between the administration, between certain changes that are going on in the economy and lack of visibility in terms of where things are going to go, that it's going to trigger more volatility, more uncertainty. Business doesn't like uncertainty. So, are you going to, as a business, make a large investment if you don't know what the next 6 months are going to bring? Probably not. So it's going to be difficult for a little while in the short term. Longer term, I think things will be fine, but definitely in the short term, it's going to be more of a challenge.
I mean, no, there's been like I've been doing this for 20 years and look, I'm not a lender. I am not, you guys, but, just as a recruiter myself, I'm actually learning a lot from the podcast and I love when you guys come on, but this is crazy. Like, this is crazy. Like all this fraud and, changes and I haven't seen this at all, actually. It's a lot of movements, a lot of moving parts. So it's scary, but
Well, I think that the other part too, that maybe we weren't aware of it. So maybe it's been there, but nobody has been transparent enough to put people on blast, maybe. Or maybe they were and they just were sweeping it under the rug. Who knows?
but so then do you think DOGE was a smart move? Putting together that committee?
I think they came in and slammed a lot of doors and did no questions. I'm going to say, as Michael said, they laid the hammer down on a lot of different things, but yeah, they definitely came in with a sledgehammer. Do I think that there's going to be some good out of it? I think that that's to be
Determined.
to be seen. Yeah. So
I mean,
but I appreciate the transparency of where some of the money is going, or the fact that there are 200 and 300-year-old people still getting SSI money like that, Social Security money. They're 200 and 300 years old. Come on, man.
going back to that,
They're going into some account. It's the same thing when DeSantis went on the news a couple weeks ago, and he's like, we have like $4 billion and we want to send it back and nobody knows how to send it back. So maybe that's the case that these people that have been passed away, I do know some people that got the stimulus money. They came into the bank and they're like, my parents passed away and I got the stimulus money. How in the world do I send it back? And I'm like, I don't know. So maybe that's part of the problem too, is that there's no transparency on if you did have that money that came in and then that person fell under hard times, they're probably going to spend it because they also don't know how to send it back.
Well, and I also learned about some of the reductions in force is that there were a lot of like ghost jobs out there where people were like it was like a paid position and a work from home role, not really identified to anyone in particular, even a US citizen, perhaps, sometimes a foreign national. So like having everybody like come back into the office, it was like a management control in order to see like, hey, we have these people that are on the payroll. Do all these people actually exist?
Yeah, because there was like a 2,700 number that I remember reading about. That was like a voluntary, like kind of dismissal of their job because they chose not to come back, maybe.
Like
Well,
a-
it's like even talking about the cuts with the SBA. Okay, you're gonna cut 43%. My concern and kind of like my comment about the sledgehammer is, does that mean that the agency can still operate with a 43% reduction? And did anyone do any analysis or determination that yes, everything would still be fine with a 43% reduction?
It
Or
won't.
is it instead, hey, the thing is I don't really see and I haven't heard that, hey guys, we did a review and analysis and we see that with this and this and elements are ghosts, elements or whatever, that the same, there's going to be no direct impact in terms of the operations, the workflow, everything else with cutting 43%. If that's really the case, then this government's been operating very inefficiently. And why are we just hearing about that? Instead, it seems, okay,
Fair.
I'm all for looking for ways to improve operations, to use use software and technology to improve things. And from what I understand, the things I've seen, even just E-Tran, the government software is not the most recent up to date. But again, so you're instead just going to shove a huge amount of the workforce out, losing that knowledge, increasing then the strain on those who are remaining. And where are you going with this? Or is it just you wanted to actually just slash overhead and that's it? That's my concern. Is I'm all for, if it ends up being that after they did an analysis and they figure between new software implemented and this and that we can reduce the force by 43% and still the same level of
Efficiency.
efficiency and service, because the government's work for us, we're taxpayers, so would want to have at least pretty close to the same level of service. But if you haven't done that first, then was that really
They're kind of going
the
backwards.
smartest move? Right.
Yeah.
Instead, are you causing more harm because you've used that sledgehammer versus determining that really here's a way to do the same thing with fewer people, but in an efficient way?
That's
Yeah, I would agree.
Okay, can we also just like paint the picture of like what does it look like if we're gonna like overhaul something in the government and do it with like a thoughtful process? This feels like it would take like the entire 4 years of this administration in order to do that. And then whoever's next might just like scrap the whole thing. So I do think that like, listen, I'm not over here like, I mean, I'm not like lighting Teslas on fire, but I'm not like all about Elon either. But like,
Right.
I think that maybe some of, this, shoot first, ask questions later kind of situation is,
It's probably
was
a backfire.
at least
Yeah.
maybe a faster way to do it.
Well, and to your point, maybe take the first year to do that, and now you have 3 years then to implement it. But in 2 months or 2.5 months, you're slashing thousands, tens of thousands without much analysis as far as they've discussed. Because wouldn't you think if they would have done that, they would have said, "Hey guys, we've done this detailed analysis. We understand. We know it's going to have this is going to improve everybody in terms of efficiency, blah blah blah, and we're going to do it." Instead, it was just, hey, we started hearing about these thousands of people getting laid off, and that's where just my concern. I mean, we're gonna run into the results of it as we're trying to get deals done to help these small business owners.
Well, you can't have a reduction and get the same not customer service. You can't have a reduction and get the same results if they're adding work and what's going to happen, what's going to happen? Because I'm sure that you guys struggle right now with the SBA in certain ways. And with the reduction in force, it's going to increase a lot of problems. It just seems like DOGE came down, 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 and they're not like looking back and saying, oh, shoot, like, what are we going to do? It just seems like they're doing, but they're not really solving anything. I think that's just me.
Time will tell for sure.
Time will tell. Yep.
It will. Everything is changing. And thanks, guys.
And it would be great with whatever software that they're using to implement and find all of these crazy things that they're cutting for them to implement into other programs to make them more efficient. So if you have this wonderful technology that's helping you figure all this stuff out, take that technology and implement it to make us more efficient so that those job cuts were justified.
They should explain it though. Like they should, DOGE should come
They're
out.
not gonna
I don't know. I mean,
explain.
like it's not like they're covering it up, but it's just a lot of stuff happening and there's really like little explanation, like Michael said, of the downsizing. But I mean, hopefully maybe it will come out or maybe it won't. Who knows?
We'll see.